welcome. You're watching Business Today Television. I'm Sakshi Batra, and this is Market Today, a show where we'll help you understand the opening action, the trading setup, as well as all the market strategies that you need to know to start your market day. Now, let's start off with a recap first. Remember, it was a choppy session yesterday, but good part is that the Nifty 50 index extended its winning streak to the fifth consecutive session, closing marginally higher and also held on to 25,100 mark as well. Now, of course, as of today, investors will be watching out for the global cues, what's happening in the US markets, especially tonight is when Donald Trump is likely to make a speech today, and the US inflation report, which is due on Wednesday too. India CPI will be due on Thursday. So all of macro data will be important to watch out for today and tomorrow to watch out for as well. Remember, US and Chinese officials have also reached a preliminary agreement aimed at reducing the trade tensions. Negotiators in London have confirmed that the two sides had developed actually a framework to implement the consensus that has been reached at previous talks in Geneva and potentially reviving the flow of sensitive goods between the two countries as well. Signs are positive. Let's see how that really shapes up for the markets as well. We did see Dow Jones, Nasdaq, and S&P 500 end higher overnight. Following these positive developments, 0.25% uptick for Dow Jones, Nasdaq up by 0.6%, and the S&P 500 also up by about 0.5% in trade. Following this, the Asian markets also inched higher after Chinese and US officials struck an optimistic note. Now, we did see that across the board, be it the Chinese index, be it the Japanese index, all of them were inching up in the morning trading session today. 0.5% higher for China, Hang Seng up by 0.8%, Nikkei up by 0.5%, Kospi also up by 0.7%, and the GIFT Nifty is also indicating to a positive start now at 25,186. Let's see how that really moves forward in trade also today. Of course, we'll be looking at a whole host of stocks that we should be watching out for in trade today, but most importantly, we'll also be looking at the the big block deals that continue in trade today. It will be Aditya Birla Capital. Here, expectations are that Advent International might be selling 1.4% stake, with a book size of 856 odd crore rupees. Indicative price will be at about 237.8 rupees per share. So that's one important block deal that you're looking at. The second one will be Marksans Pharma. Here again, it's an expectation that Orbidyne Asia 4, which is likely to sell about 2.2% stake with a floor price of 249.95 rupees per share, and the deal size is expected to be 257 odd crore rupees. In fact, Marksans Pharma has already seen that large deal take place in the block deal window. 1.02 crore shares worth 257 crore rupees have exchanged hands at 250 rupees per share. That's the development that we have in the block deal window for the development as far as the stock of Marksans Pharma is concerned. And similarly, AB Capital will also be in focus as well. Let's quickly look at some of the brokerage houses updates that you must be watching out for. DAM Capital has come out with a report on Bansal Wire today, initiated a buy with a target price of 481. The second largest steel wire and largest stainless steel wire company. They believe that it has embarked on a 62% capacity expansion plan, and they also expect the revenue, EBITDA, PAT at a CAGR of 31%, 35%, and 38% respectively over FY25 to FY27. Now, we also have a report on Infosys from Jefferies. Here they have a buy rating and a target price of 1660. They actually have talked about how management has highlighted the demand environment is not deteriorating further. The deal pipeline remains healthy, but although it's skewed towards the cost takeout or the vendor consolidation deals, they also expect AI to be net positive. So that's something that they are watching out for too. Now, apart from this, we also have reports that are coming in on Tatacom as well. Here, Nuvama has come out with a buy report with a target price of 2,000. The company also expects to focus on M&A and non-core asset disinvestment to continue. Here, Tatacom's guidance deferral was largely along with the expected lines, as the ask rate for achieving it by FY27 was also becoming quite steep. So that's something that we will be watching out for again. Now, apart from this, we'll also look at a whole host of stocks that will be important to track. But let's first welcome our guest on board. We are now joined by a very special guest, Mr. Gaurang Shah, Senior Vice President of Geojit Investments, who's now going to be with us on this special edition. Warm welcome to you, Gaurang, and thank you so much for taking the time out for this conversation. Always good to have you week on week to get an idea of as to how the markets are progressing. Last 1 week has been pretty good. We've had 4 days when we've held on above 25,000 again. So slowly and gradually, we are recovering towards the positive path. Overnight in the US also, there's been positive developments with US and China. So overall, globally, there will be some positive signs of trade tensions reducing. I want to ask you, we also have a Commerce Minister on a two-nation tour in Sweden and Switzerland. He's also talking about how India is going to be taking a pragmatic approach when it comes to the trade deals or the reciprocal tariffs with the US. We are 1 month away from that deadline. Are we getting nervous that we still don't have a deal yet? Or are we pretty confident that, since the signs with other nations are positive, India is definitely likely to be seeing some positive coming out of those negotiations?
Sakshi, thank you so much for having me on the show. Good morning to all of you all. Before I go any further, the recommendations that I'll be making, stock specific, are the views of our research team. Our company Geojit or I do not have any financial or investment interest or any other material conflict of interest. However, we share similar investment ideas with our clients. They might be holding their investment positions in the stocks recommended. Now, as far as your question, as far as the FTA, Free Trade Agreement, is concerned, look, I'm quite confident, Sakshi, that we will be able to secure each and every free trade agreement as and when it is finalized by both the counterparts and signed, sealed, and delivered. With Switzerland and UK and European Union, we have made significant progress. There is an extended stay by the US administration, Trump administration, individuals who have come to India. 8th July is the date wherein the larger framework would be decided. Being the fourth largest economy in the world, I think it will be very much productive and counterproductive for both the countries as and when we reach the finalization and getting the free trade agreement signed, sealed, and delivered. It will open up a lot of investment opportunity, especially, Sakshi, with respect to FDI, that is foreign direct investment, which is very, very long dollar flows coming into India. It will also generate employment, and of course, it will take the country's progress to the next level. So, my sense is that it will get signed, sealed, and delivered as and when it is finalized. As far as the markets are concerned, over the last 2 days, the move on the markets, we've opened up with strength, but by the time we wind up the first half and we close the second half, those gains have been surrendered. But it is good to see that we are holding our head above the water. That is staying above that 25,050, 25,100 mark. I think a close above 25,175, 25,200 decisively will open up a little bit of more upside. So the index, that is Sensex and Nifty, would be trading in the range. But I think you have a lot of stock specific news flows wherein over the last couple of days, we've had some stocks which were in the news for all the good reason and for the bad reason, especially after the credit policy, which was a twin-cylindered bazooka, Sakshi. Bank Nifty has made a new lifetime high. And I think the BFI segment should start to contribute going forward. So we are stuck in the range as far as market is concerned, but there'll be a lot of stock specific news.
Perfect. That's a great context to start off with. Let's quickly look at how the pre-open trade has kicked off. Positive note, 25,111 right now. Although just minor gains as far as the Nifty is concerned. Let's also pull up the Nifty bank there. Remember, yesterday was one day after a long time when we did see, the Nifty bank, financial services, PSU private banks, probably stepping back from lending a wholehearted support. Let's see whether that comes back again in trade today. Last 1 week, we've seen 1.7% move on the Nifty bank. But let's pull up what's happening today, especially on the banks, the large banks, ICICI, HDFC, Axis. Let's pull up all of those to see how things are shaping up at this point in time. The implied open is definitely on the positive side, but let's see whether that sustains. 2.2% down for Axis Bank today. So that is on the back foot. Let's look at the big ones, ICICI and HDFC. To see how those are moving. You're also seeing some PSU banks come up on your screens that are indicating some positive stance there. But Gaurang, let me come to you on the same aspect that you talked about. It was a bazooka, you rightly pointed out, and a surprise at that from the RBI. How do you expect the, probably the policies ahead going forward from here? Do you continue to see advanced, aggressive stance on the positive side, rate cut side from the RBI going forward as well? And do you think that will continue to provide and lend that support to the economy as well as to the sentiments that have been beaten down so far?
Well, honestly, Sakshi, I think after what was delivered on Friday, to expect a little bit more from the IBA governor, it will be a little bit too much. Let's be honest. I think the Monetary Policy Committee members work on their wisdom, and as and when whatever data points which are important and crucial to decide rate cuts, if they are supportive, only then and then. And supportive not from a short to medium term point of view, from a long term point of view. Because you can't be doing a flip flop as far as interest rates are concerned. So I think there's going to be a pause, and more importantly, I think the inflation trajectory has been lowered further to 3.6 or 3.7. Correct me if I'm wrong, and that is much below the 4% benchmark of the Monetary Policy Committee. So that's point number one. Point number two is the GDP growth rate. I think if we do a 6.5 or 6.7, we will still remain one of the best performing economies in the world. There is no other economy that can come and stand shoulder to shoulder with us. Along with that, you have government policies which are proactive in terms of development of the development process, and along with that, of course, for supporting the corporate India's growth story. So my sense is that, and the stance that has been changed, I think that's a good positive sign. So I think it's going to be a pause. We will have to see the transition of the big cut to the end consumers. But whatever has been super phenomenal. Especially, I was very much pleasantly surprised by the 1% phased out CRR cut, Sakshi, and of course, leeway to gold loan companies. That those two things were very, very supportive to the market.
Absolutely. So, on the same, if I were to ask you, we are already seeing a transmission on the lending rate, even though it is slightly slower than the speed at which the RBI has been cutting the repo rate. On FDs and on savings accounts, it's much swifter, is what we see. So, the banks are trying to protect their margins at this point in time by ensuring that they don't have to give too much of interest on the deposits. Will you see a trend where investors would probably switch from FDs and savings again to maybe bonds, corporate bonds? Will that be a trend to follow right now?
See, honestly, Sakshi, even at 7.25%, the return on FDs per annum, if you minus the inflation and minus the tax, you don't you don't end up getting anything. Virtually negligible. So that's the introspection that individuals have to do. But the principle of investment also teaches us that you don't have to put all your eggs in one basket.
Yes.
You have to diversify your investment into different asset classes so that you hedge your risk accordingly, and you are comfortably lesser exposed to any kind of risk as far as concentration of any one single. So I mean, it will all totally depend upon what kind of rates are offered by government bonds or by corporate bonds, or any other kind of instruments, Sakshi. Yes, will this have an impact on the inflows as far as FDs are concerned? So that is going to be bank to bank specific, because each and every bank has a different set of cost of lending and borrowing. So it will totally depend upon how much of reduction of interest rates is put in place by each and every bank on what kind of tenure. You have 1 year to 6 months to maybe 3 years, 4, 5 years, etc., etc. So we will have to see, we'll have to gauge that impact. It's too early to comment right now.
Okay. As of yesterday, we got that Amphi data that pointed out two, important points. One, the equity inflows that dipped 22% now, which are at a one-year low at around 19,000 odd crore rupees. The second data that came in was corporate bond funds, which lowered most inflows in over 2 years. Record inflows of 11,983 odd crore rupees in May of 2025. That's the highest in 26 months that we've seen. Again, led by what we've been just discussing with Gaurang, RBI surprise rate cut and the liquidity boost as well. Now, are you at all worried about the slowdown in the equity inflows? On the one side, we have record highs that continue on the SIP side, so that's a positive. But overall, the inflows in equities, why do you think they are reducing even though the recovery has happened, and will the trend change now?
So my wild guess, Sakshi, is okay. Whether I am overly worried about these inflows going down, not at all, Sakshi.
Okay,
I
okay.
think if you look at the overall performance, and I don't think you have to decide about investment into equity market depending upon what kind of flows are coming into the
Hmm.
mutual funds equity related month on month. I think that's going to be not a wise thing to do because you have to see overall, average of flows coming in. So in one month, 2 months, maybe in a year, you might have some days wherein you will have lower inflows coming in, but that makes up over a longer period of time. And at ground level, Sakshi, when I interact with people, not only in metros, tier one, tier two cities, but specifically in tier three, tier four cities, lesser known, cities. Uh, People are excited about India's growth story, and they are equally excited about getting higher return. The example that I quoted to you about FD minus the inflation and tax, you don't end up getting anything that will secure your future and the future of your loved ones. So
Hmm.
you tend to look at other asset classes. So equity, and my sense is post COVID, the maturity level of a retail investor has gone to the next level. They are willing to take that risk. Otherwise, why? I mean, forget about last month flows into the equity market as far as the MP data is concerned. You take
Yeah.
into consideration post COVID and continuous flows coming in. I mean, had it not been for the retail investors, how would DIs face the selling might of
Yes.
FIs? That's a record selling that any FIs would have done in any kind of emerging market. And we just corrected about 18 odd percent. Had it been for any other emerging market, they would have been down out 35, 40% or maybe more. So, you know, 1 month should not be a thumb rule to
Sure.
take a decision. I'm not worried. It'll do a catch up as we go forward.
Okay. Let's move on to some of the other aspects as well, some stocks news and some important aspects that we need to discuss with Gaurang. Auto space is something that I'm going to be discussing you with first. Maruti in that context. 2 points of news that came in. One, the company recently reduced its near-term production target for the first electric vehicle, that's e-Vitara, by two-thirds due to a shortage of the rare earth materials. And the company's document was reviewed by, of course, Reuters, that showed that automaker now plans to produce 8,221 units between April and September compared to the original target of 26,512 units as well. So this production cut comes amid the global disruptions that are caused by China's export curbs on rare earth, which are essential for manufacturing magnets and other components in the EVs. Now, one will be an outlook on Maruti Suzuki and the delay that I would want. And the second outlook that I want you to help all our viewers understand is, what kind of a worry emerges from this curb on rare earth magnets.
So, Sakshi, again, it is a work in progress. What I've been given to understand and the certain news items that I read was that Indian government have sent their representatives to China to talk to
Yes.
the counterparts and to
Mm.
resolve this rare earth magnets issue and the curbs that has been put in place. Uh, India is also looking at a third country to provide with such kind of natural resources, which is extremely important for EVs as well as defense. Resolution immediately, I think it's going to take some time. Whether this will be a negative as far as EV productivity is concerned, I think that will depend upon again company to company what kind of reserves they have and how long that's going to last. Specifically for Maruti, yeah, because of that news flow that you mentioned about a reduction in production of certain categories of vehicle, we already saw some bit of impact yesterday, and maybe we might see a spillover effect today, tomorrow, day after. But long term, our research team is positive on Maruti from the fundamental point of view, and we have a positive recommendation on Maruti. The only problem is that they were late entrant as far as EVs is concerned. You know,
Yeah.
initially the statement made by the management was they were not at all interested in venturing into EV production line. And now with the kind of consumer focus that has been there and the success that has been there, I think they have been compelled to come and do it up. So better late than never. But yes, short-term negativity could be there as far as the rare earth magnets supply side issue is concerned.
Okay. And how about the other automakers, sir? How are you looking at Tata Motors, for instance? Last couple of days, we've also heard from Tata Motors management on the outlook on the CV business over the next 2 years. They've set their market share targets as well, what their expectations are going forward. How are you looking at Tata Motors for that instance? M&M, how is that one also looking within the four-wheelers? And what's your overall outlook on even two-wheelers, sir?
So overall, we remain positive on the entire auto pack. Sakshi, the problem is that this is not a company-specific problem. Supply of rare earth magnets. This is a problem for the entire auto industry and
Yes.
also to some of the crucial component manufacturing companies. So it's not going to be that only Maruti is going to get affected. Each and every company is going to be affected, whether it is a two-wheeler, three-wheeler, four-wheeler, or a commercial EV manufacturing company. Impact would be felt, like I said, depending upon what kind of reserves they have and how long that's going to last, and how soon India is able to secure either a third country supply or itself with China. Uh, this also is going to be a lesson for learning. Or as a matter of fact, I was reading a report yesterday, Sakshi, that we are trying to find alternatives to rare earth
Yeah.
magnet. So that's also some. But all these things will take time. It's not going to happen immediately. So
Mm.
impact would be felt of this rare earth magnet curbs that has been put in place by China to the entire
Okay.
auto pack. It would depend company specific as to how long they can last in terms of whatever reserves they have.
Okay. The other space that's going to be in focus today, sir, is from the consumption basket, the liquor firms. Now what's happened as of yesterday is that in a major fiscal move, Maharashtra government under Chief Minister Devendra Fadnavis has unveiled a revamped liquor policy that's aimed at generating additional 14,000 odd crore rupees of an annual revenue. Now, with this, the cabinet has approved significant hikes in the excise duties and has now introduced new regulatory measures as well, signaling a strategic push to strengthen the state finances. But that would mean the IMFL liquor will now attract higher duties. How would you expect these firms, especially with huge operations in Maharashtra, supplies in Maharashtra, to be hit now with this kind of a hike, or will this be absorbed easily?
So I think any kind of habits which are related to the sin tax
Yeah.
are going to face their own difficult times. And this is not the first time that this particular industry has been red flagged as far as these kind of tax are concerned, excise duty is concerned. Uh, Whether it will lead to hit on the consumption side, there are always alternatives available, Sakshi. So if you are consuming a higher brand or a mid-size brand, you will possibly switch on to a lower end segment, provided your taste buds agree to that. But it has never been a long-term negative in terms of consumption. Again, since we are discussing about this sector, prudent to give a disclosure that our research team has coverage on United Spirits as well as United Beverages. And both these companies have a history of being into this sector, and both the companies have tremendous amount of brand loyalty, which is very, very crucial for this particular sector. And along with that, Sakshi, they have got product offering across categories. So yeah, maybe because of this excise duty news flow, impact could be felt. How much is going to be passed on and how much is going to be taken in, that remains to be seen.
Okay, got that. Let's quickly look at the markets now. Markets have opened tad lower. Nifty about 25,085 right now. You can actually see an 18-point over dip. But you're also looking at the broader markets that are hovering higher. Remember, this is the pocket that has been showing a lot of resilience. Mid and small caps both are higher in trade. You have the IT stocks that are also hovering up, even though the Nifty Bank is also showing us slight signs of weakness at this point in time. The advances to decline ratio is again skewed towards the positives, 4 is to 1 ratio, 1322 advances to 326 declines at this point in time. We will quickly look at some of the key stocks. Let's start off with Maruti Suzuki. That's the one that we discussed just now. And to see what is the impact of the announcement that the company has really made there. You can see about just a 0.5% decline on that front, even though stocks like M&M and Tata Motors are opening on the higher side. We're also looking at the heavyweights like Reliance Industries about 0.5% higher in trade right now. So the markets are now toggling between the highs and the lows, 25,115 right now on the Nifty. So it's a mixed start, if you could say, for the markets today. Stocks that are hovering up are Eternal, M&M, Reliance, Cipla, Bajaj, Finserv, NTPC, while on the declines you have Grasim, Titan. You also have names like L&T, Ultratech Cement that are seeing some declines at this point in time. We'll also look at the liquor names that will come up on your screens as the reaction that we have been just discussing with Gaurang. But let me come to Gaurang now. Talking about the cement pack, are you looking at this space afresh as well? With these fresh brokerage houses updates coming in, is cement going to be again coming back into focus as a theme, sir?
I think cement was in focus for the last couple of trading sessions because of the,
Yes.
you know, uh, infrastructure activity and of course the positive news flow. So my sense is that yes, despite of the monsoon, cement sector will stay in spotlight for all the good reasons, Sakshi. Government spending on the infrastructure, at the center, at state level, real estate sector doing well, and real estate sector was buzzing after the rate cut, if you remember, Sakshi, for the last two,
Yes.
3 days. And of course, the capex, private capex. Of course, a little bit too early to talk about private capex, but I think that should also be supportive to the overall consumption as far as the entire cement sector is concerned.
Okay. And lastly, Gaurang, if you could help us understand after the Q4, after the RBI policy, have you made any changes to clients' portfolios, any additions that you may have done that you'd like to highlight for our viewers?
Well, not specifically, but yeah, my sense, and I have always we've always discussed this that
Yes.
the entire BFSI segment looks very attractive.
Yes. Hmm.
With the rate cuts, I think credit demand is going to go up to a great extent, and that will be supportive to the loan book growth. Along with that, over the last couple of quarters, asset quality has been improving slowly and steadily, which then results into provisionings coming back to the balance sheet. And of
Yes.
course, the overall growth story. So if you have to if you have to become the next trillion-dollar economy, or if you want to become the largest manufacturing hub, I think there are
Yes.
two sectors that need to contribute: BFSI and power. Without which it will be difficult to get there.
Okay, got that. Well, Gaurang, we'll have to thank you now for being with us on the show and for
Thank you.
sharing all your thoughts with all our viewers. Always appreciate your time. Hope you have a fantastic time. We'll see you soon.
Thank you so much, Sakshi. Sorry I have to leave early today. Got a little
Thank
bit
you.
busy schedule. Thank you.
It's okay. We'll catch you soon and we'll make it up for the other time. Thank you so much. All right, viewers, what now look at the markets, and of course, we'll be welcoming another top guest just in a bit on our show as well. Let's look at the markets. Let's look at first up the liquor companies. You are actually seeing a decline on Radico Khaitan, United Spirits, Allied Blenders as a reaction to that duty hike that's coming. Even though Som Distilleries is actually up and about in trade, there is a mixed reaction, so to speak, at this point in time. Within the markets, you have several other pockets that warrant our attention. GM Breweries, by the way, is also up by 7% odd. Not seeing that impact there. Gillette is up by 4%. You have Tata Communication, remember this was a stock that was in the brokerage houses radar, down in trade today. You're also looking at several other stocks that will be important to watch out for throughout the course. And of course, the large trade impact that we should not forget, something that we marked out for you. Aditya Birla Capital showing a reaction positive, 2% higher after that large deal that has taken place. Let's welcome our guest on board. Mr. Rudramurthy is now joining in on the program with us. He's the research head at Vatna Investments. Warm welcome to you, Rudra. Good to have you with us on the show. We have seen tremendous, rallies in the markets, a move towards the higher side, several pockets. The Nifty Bank is at record high now. So we are back to talking about record highs on the index level. Of course, several stocks had been already showing us that path over the last couple of months, but the index level move has also started to happen. How are you looking at the markets right now?
Very good morning and thanks for having me in the show. Last week, I'm very sure you remember, and I was so clear before the RBI policy that this market will go up, no shorting whatsoever. I'm not bullish, but super bullish. And you saw the move post the RBI meet where there was CRR cut, where there was repo rate cut, and what else you could have expected more, because it was not 25 basis point but 50 basis point. But the point is, after all this news, the margin of safety and entering now after all this news will be very tough. In fact, you have to make an entry much before this comes, and that's what our viewers got benefited last week. Now, I still put my neck out and say this market is still a buy on dip market, no shorting whatsoever even here, and the sectors and stocks keep rotating, and you will have the fresh leaders to lead the bull run. But for me, no shorting whatsoever, and now markets are more bullish because we are decisively trading above 25,000 for over 2 days now. And if you see Bank Nifty, we are decisively trading above 56,000 level. So above 25,000 Nifty, above 56,000 Bank Nifty, and also most important, the FII net short ratio is still around that 75-80 range. I feel this has to come to 40 and more short covering will come and market is headed upward. I will see Nifty coming very soon to the 25,400, 25,700, 800 zones, and I also expect Bank Nifty to go to 58,000 first and then to 60,000 also very soon. So no shorting this market whatsoever. I continue my bullish stand and I will hold on to all the long positions what I have from last week. But you have to be now different in terms of picking your sectors and stock. But this market is still a buy on dip market.
This market is still a buy on dips market, and you can actually see a super bullish view that's coming in from Rudra at this point in time. Rudra, first up, we'll start off with your stock ideas, and then I will come to you with the stocks that I want to understand from you. How are you looking at the key stock selection at this point? Where are you picking out stocks from right now?
Sakshi, I'm sure you have to remember this and give that credit. I was saying it is PSU, 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 and I was so bullish on public sector stocks. And I said whether you want to pick it up from banks or you want to pick it up from power, you want to pick up defense, you want to pick up railway, choice is yours. But power, railway, defense, shipping, all these are sectors which I really liked. And my broad theme was PSU, PSU, PSU. That is, power sector, the public sector undertakings will do good. And in that, I gave you some sectors like power, railway, defense, shipping, all that. But right now, and also I remember very well, private banks, I was very, very bullish, and you saw already a big move in banks and even private bank. Now I say there is an opportunity in mid-sized private bank. So whether you want to pick up Federal Bank, you want to pick up RBL Bank, you want to pick up Bandhan Bank, choice is yours. And yesterday you saw some profit booking and you are now getting a fresh entry into these stocks. Yes, I was recommending RBL Bank from 180, 200 every level, but now even at 220 or any dips to the 210, 215 mark, accumulate RBL Bank. Bandhan Bank at current market price of around 180, for me 170 is an ideal price, or even at current market price and on any dips buy on to Bandhan Bank. And I'm very sure you should remember this, Sakshi. I said people keep asking me which is the next Indigo. People ask me which
Yes.
is the next Bajaj Finance, and I told the next Bajaj Finance is Bajaj
Is
Finance.
Bajaj
And see
Finance.
the move in Bajaj Finance, see where it is now. I said buy Indigo not at 4,800, even at 5,200, I said.
That's
And see
right.
where is Indigo now. So for me, yes, Bajaj Finance, Indigo, these are all stocks which will still give you money. And again, I repeat, the next Bajaj Finance is Bajaj Finance. You will see 10,000 coming very soon. The next Indigo is Indigo. You will see 6,000 coming very soon on Indigo. For me, HAL is another stock which you should not miss. I will put HAL in the same category of Indigo, or for that matter Bajaj Finance. I won't be surprised to see HAL going to 8,000 rupees, and that might take 1 year time. But still for me it is a safe bet. If you are bullish on defense, for me the number one pick is HAL and number two will be BEL. I know
Hmm.
valuations are expensive here. Yes,
Yes.
for me as an investor, unless you have a 3 to 5 year time frame, entering these stocks at current valuation may not be safer. But however, if you get any dips to 370, BEL will be a very, very good buy. But even at 394, for me, BEL is a much better buy than picking stocks which are all underperformer. Avoid stocks like your idea, where I have no idea and I have been repeating this. I have always told go to Bharti Airtel. When you have Bharti Airtel, why do you want to go to idea and see where is Bharti Airtel today and see where idea is? So you have to be right in stocks. Even if good companies you buy at high valuation, no problem. If you hold it for a longer period, you will make money in stocks like BEL, HAL, stocks like Indigo, stocks like, as I have told you many a times, this all these frontline for me stocks where still there is money to be made. You have to buy Bajaj Finance, you have to buy Indigo, HAL, BEL. These stocks still will give you money. But right now, if you ask me, insurance as a theme, I am very, very bullish. New sector
Okay.
I am giving you, new stocks I am giving you. HDFC Life, SBI Life, don't miss them. Even for that matter, Max Financial looks very good to me. So HDFC Life, Max Financial, and even SBI Life, these are good stocks which you can own. And for me, Exide Industry is another stock which I have been repeatedly telling you. Earlier it was at 360, 370. Now Exide is at 410. Stock is ready to move towards that 430, 440 mark. And I'm sure you remember my two stocks in e-commerce which I've always told is Paytm and Zomato. See where is Paytm? I was shouting for Paytm at 800 rupee. Now it is closer to that 950 to 1000 already. And yes, Paytm will be a 4-digit stock very soon. I even
Hmm.
told I'm not recommending Paytm at the IPO price, but at 800 it was a mouth-watering buy, and you have already seen a 20% move. And these are all F&O stocks. So these are stocks where you could have bought in futures and held your position. So for me, whether it is Exide Industry at current market price, whether it is your HDFC Life and SBI Life, or whether it
Ah.
is the PSU themes, mid-sized private banks, all these offer a great opportunity even at current market price. Buy this market, no shorting whatsoever.
Okay, so there you have about 8 to 10 stock ideas that Rudra is betting big on, that you could definitely identify a diverse set of stocks that he's picked out from various sectors that you could probably choose even at the current levels for your own portfolios as well. Rudra, let's come to the views on the stocks that are on the move because of the news flow. First up, the liquor-based stocks. How are you looking at that? Now, United Spirits is down 5.5%. You're also looking at a dip on Radico Khaitan. Allied Blenders is down in trade. Of course, with that IMFL hike that the Maharashtra government has now announced, how would you look at these liquor stocks? Do you think this is just a knee-jerk reaction? In the long run, do you think this will be absorbed well and therefore one can continue to believe in these stocks, or how will you look at them?
Sakshi, very simple one line answer. I don't consume liquor, nor I have liquor stocks.
Okay, no views on liquor stocks at this point. All right, we'll go across to understanding on Maruti Suzuki then. A delay in the EV production of Vitara, is that a worry at this point in time? Already a late entrant to EV, and now with that rare earth magnet supplies, there could be some delays. Would you look at cautiously on Maruti, or do you think this will also pass?
This will also pass, Sakshi. Two stocks I will recommend from automobile for an investor will definitely be first M&M, Mahindra and Mahindra, and second choice will be Maruti. So these are two stocks you have to own in your investment portfolio, and I won't be surprised to see a big move on Mahindra and Mahindra on the upside. Yes, at current market price of 3,100, it offers a great buy. 1 year from now, getting the decent 20-30% kind of a return on your portfolio, you can do it having Mahindra and Mahindra. So again, I will repeat, have stocks like Bharti Airtel, Mahindra and Mahindra, Indigo, and I spoke about Bajaj Finance. So these are all stocks, no doubt on valuation bit expensive, but still you will not lose money and you will make money eventually having some time in these stocks. So for me, Mahindra and Maruti is a buy. And if you want to pick an auto stock where you want momentum, yes, then you can pick up Tata Motors, or else I will still go to Maruti and M&M as my two top picks from auto sector.
Okay, got that. So that's the auto sector. Now I want to understand from you your views on the Anil Ambani group related stocks. Why am I asking you that is we have been seeing a consistent pickup in these stocks, news flows that are gathering pace as well. Look at Reliance Power. Yesterday it crossed over the 70 mark for the first time after some 10 years. 73.6 right now. So the gains are substantial. It has been, rallying substantially over the last 1 year, 3 months also. I think 100% move was seen on this one. Reliance Infra is coming back in focus too. What exactly is your focus on this space? Are you looking at it? Are you avoiding it completely even now despite all the news flows and the momentum?
Sakshi, one thing we have to understand very clear, can you allocate 100% of your portfolio to these type of stocks is the question number one I will ask you. So if you say I want to put 10% of my portfolio all put together into these type of stocks, yes, you can do that. But I will not even allocate 1% of my portfolio to these stocks, because if I really want to gamble, better to go to Goa, because there you can check your luck also and you will get some entertainment also. Here you don't get entertainment. My point is very simple. I cannot allocate maximum of my capital into these stocks. If I want to gamble, there are better places than stock market where you get entertainment and gambling. You can test your luck there, but I will not put my money into any of these wealth destroyers. You know what was the IPO price at which Reliance Power came? I can never forget. Karlo Dunia Mutti Mein was the tagline, and it was Reliance Power at 490 rupees was the IPO when it came, and Milkman, Watchman, and everyone bought Reliance Power. They opened new demat accounts. Everyone wanted to buy it because they want to get the allocation. They thought they will not even get allocation, so they had 5, 10 different demat accounts in all their family name, and they all put their money without understanding what the company, what the valuation is, and everyone wanted to buy it and hold it for listing gains. I know people, those who bought Reliance Power, Reliance Infra, they're still holding. And these people have told me also, Rudra, I have not made any loss in these stocks because I have not sold it. It is only a book loss. I will never sell it till it comes above 500 rupees Reliance Power, and they will wait not in this generation. They want their son, grandson to also continue holding those stocks, and they want to wait for 500 price to come. I wish them all the best. Let them hold on to next 3 more generations to come. But my point is, why do you want to bet on these type of stocks? I understand the short term move. I know, yes, Reliance Infra, for example, or Reliance Power for that matter, from 45 rupees, now the stock has gone to 75 rupees within a matter of 1 month. And similarly, in case of Reliance Infra also, I know, yes, there has been a big move in the stock and a return of 60-70% from the lows. But I will not advocate putting any money into these stocks unless you are a quick trader, unless you have some information which I don't have and you have something dominant about these group of companies. I will personally avoid any of these stocks. If you want to put your money, put 5-10% of your portfolio. You might earn some money, and please keep praying God and keep chanting Om Namah Shivaya. You might make that money also.
Okay, so clear view there. Rather than looking at these stocks, look at fundamentally good, strong ideas. Many of them have already been shared by Rudra on the show as well. So just wanted to get that clarity because a lot of viewers' questions have been coming in that should they participate in this upward rally in these stocks. Okay, let's look at some of the other aspects in the trade today. Where are we seeing some momentum? Sectorally, the action is coming back on autos. You are seeing even metals shine, slight gains on pharma, real estate, that's also doing well, consumer durables. Oil and gas is up by 1%. You can clearly see a move across the board there. Let's pull up this one. Oil and gas, you have BPCL, HPCL up in trade. Oil India is up. IOC is up in trade. Even the gas stocks like GAIL and MGL, IGL, Gujarat Gas, they are also showing us some traction. Rudra, any fresh move that you expect on the oil and gas story?
See the names, whatever you told in terms of HPCL, BPCL, and even for that matter, OIL looks very good for me on chart. And
Okay.
for me, valuation comfort is definitely there. And I also feel, yes, crude oil prices have more or less come to that bottom, and you don't expect any sharp downturn in crude oil prices. So for all these OMCs, it is always good that crude oil prices are stable, or in fact if it comes down from current level, it is much better for these stocks. So take for example Oil India. So for me on chart, yes, 447 was the breakout level. Last 3 days there has been good price and volume action, and stock trading above 447 at 453 current market price. Clear buy on Oil India, looks very strong. Look at BPCL, again clear breakout above levels of 325. Now at current market price, it is trading above 325 comfortably and giving you a breakout. At current market price, the entry is very good because you are just entering a stock where the breakout has come, and for me definitely BPCL looks very strong. And similarly, if you take even for that matter HPCL, that is also looking very strong for me. So yes, for me, if you see Hindustan Petroleum, for me this is yet to get that breakout, and the breakout for HPCL is at around 420. Now currently it is at 414. So already you have got Oil India and BPCL which has seen the breakout, and yes, it's a matter of time, even Hind Petro will make that breakout above 420. And for
Yeah.
me, all three stocks looks very good at current market price. Thanks for identifying the sector, Sakshi. And I will say, put your money on these three stocks as a trader, all three available in F&O. And HPCL, BPCL looks very strong. IOC also looks good for me. So yes, OMCs as a basket looks good, and at current market price it's a clear buy. Risk reward is definitely favoring you a fresh entry here. And IOC level also, if I have to give, yes, 146 is the breakout zone, currently at 145 IOC. So yes, let the future price go beyond that 146 and you will see breakout even in IOC. So HPCL, BPCL, IOC, Oil India, all are looking very good, and it's a clear buy at current market price.
Clear buy at the current market price. We'll definitely look at this aspect and we'll follow through, as the day passes by as well. Now, let's understand on one more sector, and that's from the commodity space again, metals. How are you looking at the metal story at this point in time? A lot of dividend-based news that's coming through. The mergers, acquisitions. We're also looking at capacity expansion news coming from the metals basket as of now. Any key stocks that you particularly like and advise investors that you could share your views on even now?
Sakshi, let me make it so simple, clear to our viewers. Number one, I am also seeing some of the YouTube shows where people are recommending short on metals. I, in fact, get more confidence after seeing their short calls, because for me, these are jokes program or entertainment program. After a stress of 9:15 to 3:30, we need some amount of stress buster and entertainment, where I too also watch these shows to get some amount of entertainment. So for me, at least if you don't want to buy metals, for God's sake, don't short them. You cannot sell metals. If someone can even understand charts, even a blind fellow can read charts and say metals are not on the short side, don't short them. If you don't want to buy, at least avoid the sector, but definitely metals are not short. And I am telling you, if you want to look at buying, yes, metals looks decent for me. You have to be very stock specific in metals. Yes, for me, three stocks I like in metals. Number one, I like Vedanta. For me, Vedanta last 3 days price action has been very strong, positive, and Vedanta has crossed 460, and it's a very, very clean, clear chart, and it's a buy. Mark this chart, mark this price, and I am telling you Vedanta will cross 500 very soon. 450 will be my stop loss on a closing basis for Vedanta. Second stock to pick from metal, JSW Steel and Jindal Steel, both look very, very strong. For me, yes, JSW Steel and Jindal Steel has long way to go, and you will make money. I won't be surprised to see JSW Steel giving a 20% move from current market price. 1000
Okay.
rupees it's a buy, and Jindal Steel at 960, 965 it's a buy. And Hindalco and Nalco also looks very good for me from the aluminium space. So for me, metals is a clear no shorting sector, and 5 stocks I have already picked up from there: Vedanta, Jindal Steel, JSW Steel, Nalco and Hindalco. So these are stocks which I really like, and metals will do good.
Metals will definitely do good. We'll definitely keep an eye out on this space as well. Let's also shift focus to the broader markets, mid and small caps, Nifty 500. When one has to choose from this basket, what is it that you keep in mind, Rudra? And can you help us understand for those now looking at a recovery in mid and small caps to again probably shift some focus there, allocate more funds to this space? How would you advise them to go about mid and small caps?
Sakshi, last time when you asked me this broader market question, I was talking about so many mid and small caps, broader market, and I even
Yes.
told the move in broader market has just now started. I
Yes.
also very clearly told from April to May mid that 1.5 months we saw only move in large cap, broader market was yet to participate, and I said broader market will now start participating. This is not the time to exit the mid and small cap stocks, but you have to hold on to them. I also told that large cap move, whatever you have seen, will now shift into broader market, and which you have already seen. So for me, at least good quality mid and small cap stocks still have a lot of space to move from here. And if you ask me names, I can give you a lot. First of all, now look at stocks like from Power Theme and PSU. Look at REC, look at PFC, look at Power Grid, look at NTPC. All these PSU themes from Power, and more or less the mid cap kind of a stock, larger mid cap kind of a stock, they do very good. And for me, even stocks like Star is a star performer, and I was recommending this Stride Sacro Lab continuously, and Star has made already a star move right now. And for me, even there were many other stocks, whether you want to pick up Genesis International, you want to pick up even mid-sized banks for that matter. Look at even PSU banks like your Canara Bank, Punjab National Bank. For me, even see the results which came last quarter of Canara Bank, it was very, very good. You can't miss Canara Bank if you want to be in broader market and participate in PSU team. So all these names, whichever I'm giving you, REC, NTPC, PFC, Canara Bank, I spoke about Star, I spoke about Genesis International. So all these are stocks which have long way to go, and broader market in general, if you are into good quality companies, they will perform. You have to hold on to these good stocks.
Okay, got that. So that's as far as the PSU stocks are concerned. For the day towards the end, Rudra, do you want to highlight for all our viewers the strategy that one needs to follow on the markets?
Okay, so I will just conclude by giving these closing remarks, Sakshi. Number one, remain bullish, and we are staying way above 25,000 in Nifty, and Bank Nifty is above 56,000. So that's a clear indication that this market will still go up. Only thing is we will see more short covering, some amount of time-wise consolidation and sideway move is very good for market. Stay with right stocks and sectors, and I've given a lot of names. Yes, even pharma now can do very, very good. IT has started already participating from yesterday. So again, from IT, I can pick up stocks like Coforge, which I have been repeatedly telling to buy, and look at even stocks like Persistent System, Wipro for that matter, Tech Mahindra looks very strong to me. So IT will do good, Pharma will do good. Yes, from Pharma I have always told I will be a buyer in Divi's Lab and Laurus Lab. See where Divi's Lab is today. I said again, this is a portfolio stock like your Indigo, like your HAL. So like your Bajaj Finance, you should not miss having in your portfolio Divi's Lab. So these stocks look expensive, but they continue to do very good. Every day you get move in them. So every day it is on the upside. So these are stocks, no doubt valuation, there is some amount of discomfort. But yes, companies with great earnings and visibility of future will always trade at higher price. You can't expect Divi's Lab to be trading at a lower P multiple. So for me, yes, pharma, power, automobile, these are all sectors which will do good from current levels, and market is very bullish. Nifty and Bank Nifty might see some time-wise consolidation here, but still it is headed upward. No shorting whatsoever. Broader market will participate well from here, and I've given so many stocks and sectors again in the show with Sakshi here, and all these things will perform very good.
Okay, fantastic. Rudra, always a pleasure to host you with us on Market Today. Here's hoping that you have a fantastic time. We'll see you soon on another edition on Daily Calls now in this week. Thank you so much for being with us on this special edition as well. With that, viewers, we are now going to be wrapping up the morning edition of Market Today. Seems like we have started off positive. Let's see whether this continues throughout the course of the day. Rudra is pretty positive. He's also highlighted several sectors and stocks that he's betting big on in the recovery and the ongoing uptrend in the markets as well. Market coverage will continue through the course of the day, and we will answer all your stock-related queries on Daily Calls. So stay tuned for that too. It's time.